Good day. Welcome to today's episode. So, on today's episode, I'll be taking you on market structure. So, as a beginner trader, you should understand that we basically have three types of market structure. Okay, so today is market structure. Market structure. We basically have three types of market structure in the market. Number one is we have the uptrend market. We have the uptrend market. We have uptrend, we have downtrend, then we have our ranging market or consolidating market. You call it your ranging market or you call it your consolidating or ranging market. So let's dive in. Quick one. So here now, for your ranging market here now, your uptrend market, your uptrend market is what we also known as, you can call your uptrend market your bullish market. You can call it your bullish market. Then you can call your downtrend your bearish market. You can call it your bearish market. Your bearish market. So you might ask yourself, what's bullish and bearish? So bullish and bearish are the two names that we make use of in the financial market. Bullish market signifies buyers in the market. You might have heard some people saying we are on a bull run, meaning we are on an uptrend in the market. So that's basically what bullish market means. And if someone tells you that we are on the bear run or market is currently bearish, it means that market is selling. So that's it. Just have it in mind that bullish market is just market that is buying to the upside, while bearish market is market that is selling to the downside. So that's basically the two names here now. So moving on, we have our uptrend market. This is our uptrend market, and we have our downtrend market here now. This is on our downtrend market. Just a flip of the uptrend market, you get your downtrend market. So now we have our consolidating market. We have market consolidate. So there are names attached to all these things here now. For instance, here now, we have on a bullish market here now, we have series of higher highs here now. Then we have this higher lows here now. This for bullish markets. So we have our impulsive buy, the first buy. If we are on a uptrend position, the buy that is going upside is what we call an impulsive buy. Then we now have a correctional sell. So we have an impulsive buy, a pullback, impulsive buy, a pullback, impulsive buy to complete our bullish market and to compete with our uptrend market. So here now we have our first high here now, higher high, market comes down to create a higher low, created another higher high, comes down to create another higher low. So that's it. So we have this here now to be our higher high. We have our higher high here. So we have our higher low. So we also have the same thing here now, our higher high. And we have here now to be Yes, it's right. So that's it for our higher high. Market don't just go high because it is a bullish market. You don't just expect it to keep going up like that. It will have a series of impulsive buy, correctional buy, impulsive buy, correctional buy. That's it. And for a bullish bearish market, the downtrend, same thing goes with the bearish market, but now the name changes. We have our lower high, then we have this here to be our lower low. Please sorry for my tongue. And we have our lower high. We have this here now to be our lower low. Same thing. So this it here now. And sharp. The same goes to here. High, lower high. And the same goes here too. We have lower high and that's it for our bearish market. Same here now. We have this to be our impulsive buy. This to be our correctional buy here now, and we have our impulsive sell. Just know that if the market is on a downtrend, the current market situation that is favoring the downtrend. So we have this thing here now. This is a favorite market situation that is favoring the downtrend market here now. It's basically called an impulsive sell. For this here now, market is going up. This movement here now is favoring the buy, the uptrend. So we call this here now an impulsive buy. For the one favoring the market, we call it an impulsive sell, favoring the downtrend market, while the one favoring the uptrend market is called an impulsive buy. And during a downtrend, if we have markets buying on a downtrend, we call it a pullback, or you call it a correctional move, because you don't just expect market to move in this direction. Market don't move like that, or you don't just expect markets to give you something of this nature. Market don't just move like that. So market will basically give you an impulsive buy and a correctional sell. Impulsive buy, correctional sell, or a pullback. You call it either a pullback, or you call it a correctional or you call it a correction. Then impulsive buy, correctional pullback, impulsive buy. So same goes here now. We have this correctional buy, impulsive sell, correctional buy, impulsive sell, correctional buy, impulsive sell. So let me just put it down here now. We have impulsive and sorry, let me use this. So this will be we have this here now to be impulsive movement. Impulsive movement here now. And we have this here now to be our correctional or pullback. Correction. And this to be our correction or pullback. So that's it. Micronit. Same goes here now. We have this here now to be our impulsive, and this here not to be our correction. Same goes here now. We have this here now to be our correctional pullback, and we have this here now. We have this here now to be our impulsive movement. So that's how it goes. Correction movement, impulsive movement, correction movement, impulsive movement, correction movement, impulsive movement. So let's check out for our this thing. Let's check out for how our ranging market works. So for the ranging market here now, let me make use of here. For the ranging market here now, we have series of equal highs, equal lows, equal highs, then market pulls back again, equal highs, market pushes down again. So this is what we have in our ranging market, and this is here now. We have equal highs, we have our equal lows here now. So a ranging market or a consolidation market is a market whereby market is either moving in an uptrend direction, not in a downtrend direction, but thereby creating equal highs, and equal lows, equal highs and equal. So this is it again. This is our equal lows here now. That's it. That's what we have here now. So market is not neither moving upside to the upside direction nor moving to the downside direction, but it's giving us equal highs and equal lows. So this market can simply do something of this nature, then break to the upside, and we now say that we have what we call a breakout. Then it can now tap to this equal high now and start generating higher highs. Higher highs. So that's it for it can also break down to the downside, comes back to tap this here now and starts moving. So there's no fixed way that we have that market should move. Market either tends to move upside or downtrend, or upside or downtrend, or it consolidates. So at this point in time, we might have something of this nature. We might have market creating something of this nature, and then market started consolidating. After series of consolidation, after some series of consolidation, then market breaks structure and started moving in a downtrend movement. So there's no just fixed way that we expect market to move from. It can still break to the upside here now and start moving in an uptrend direction. So that's just basically how market works. That's basically how market works. These three movements here now. So let me show you a chart example for more clarification here now. This is our chart. This is our chart here now. You can basically spot your downtrend market here. This is your downtrend market. You see here now, market created a correctional buy. Then we have an impulsive sell, a correctional buy, impulsive sell, a correctional buy, impulsive sell. The market changes to the upside, a correctional, an impulsive buy, a correctional sell, impulsive buy, correctional sell, impulsive buy. The market still change again, giving us correctional sell, positive sell, correctional buy, positive sell. So market keeps moving in that direction. So there is no fixed way that we have markets to move on. So we see this one here now. This is what we call a consolidating market. You can see this equal goes here now. You have this equal highs here now. So this it here now. Market started from here. Market started from here. Market started from this point. Equal high. Equal high. Equal highs. Then started giving us this impulsive sell, correctional buy. Impulsive sell, correctional buy. Impulsive sell, impulsive buy, correctional sell. Impulsive buy, correctional sell. Impulsive buy. So you can see that there's no fixed way that this market moves. So this it here now. This it. Is basically this market. This it here now. We have our consolidation market here now. We have market consolidating, and we now have this set to the downside before we have set to the buy to the upside. So it's just what I just thought you guys here now. Ranging market, downtrend market, or you call it a bearish market, then uptrend market, or you call it a bullish market. So this is just the three market structure we have. So just know that in an uptrend market, remember that in an uptrend market, we have higher high, higher lows, higher high, higher lows. Then we have our impulsive buy. Then we have our Then we have our correctional sell. We have our impulsive buy. We have our correctional sell. Then we have our positive buy. Then for the lower downtrend market or bullish market and bearish market, we have our market moving in a series of lower highs and lower lows, lower highs and lower lows, lower highs and lower lows. Then what do we expect market to do from here? So this is what market is doing from here now. Giving us a correctional buy, impulsive sell, correctional buy, impulsive sell, correctional buy, impulsive sell. So that's it for today. And we have our ranging market giving us equal highs and equal lows. That's just it for ranging market. And it's best to stay out of ranging market, but that will be a topic for another day. So with that being said, thank you for today's class, and tomorrow class I'll be taking you on some forex jargons you need to know, because this is not just a higher high. We can call this a breakup structure, and when market changes from uptrend to downtrend, we call it market structural shift, or we call it change of character. And we also have some other jargons when markets react to a demand zone, when a demand zone turns to a supply zone. So many of them. So like, subscribe and share, and stay tuned for the next video. Thank you. You can